Hi everyone, welcome to this time's Fluctuating Finance. Well, situation of China's bonds market was pretty unstable, full of noises. Actions of trading followed the actions of Trump actually. Investors couldn't find a stable and reasonable trend to make an informed decision. To the last, sentiments of investors kept fragile and they got a short period trading pattern. The investment vibe is like going up in the first several days, then turning down reversely in the rest. Plus a changeable trading way, both make bonds market so unstable and easy to lose money. As always, let's see the whole picture of bonds market, then dive into the details, okay? Total bond yields curve was a little flat compared to the week before. Yields of 3 years term went down 2 basis points, 5 years term stayed at the same position, but yields of 10 years term went down 5 basis points. Weird. And the 30 years term went up 1 basis point. If we compare to the one of December 9th last year, the curve kept twisted and flat. Yields of 3 years term increased 9 basis points, 5 years term went down 2 basis points, 10 and 30 years terms went down 25 and 22 basis points. The spread between Chinese treasury bonds and the commercial bank perpetual bonds enlarged, with 5-year spread increased 2 basis points to 45 basis points. About the actions of investment agencies, agriculture and commercial banks bought 41 billion long and ultra-long-term bonds, whereas city commercial banks sold 44 billion. Then let's dive into the detail part and see what happened last week. In terms of fundamentals, PMI data came out during Dragon Boat Festival. The manufacturing one was 49.5, slightly better than previous one 49, but still below the prosperity line 50. This just confirmed the negative effect of Trump's tariff action before, and made a long-run support to investments in bonds market. Next, the United States International Trade Court suspended the Trump administration's reciprocal tariffs on May 28. Then the U.S. Appellate Court temporarily resumes the implementation of the Trump administration's masterpiece. See, the whole thing is a pretty mess, giving investment web a lot of noises and made the bonds market fluctuate a lot. Put these things together, the total China bonds market fluctuated around nowadays value and changed less to the before. For funding conditions, the PBOC has been investing liquidity in the interbank market for 2 consecutive weeks, which I can deny is a loose attitude towards China's bonds market. The financing price for 7 days of non-bank agencies was around 1.65. Looking ahead to the next week, 1.6 trillion liquidity of reverse repo will be due. The PBOC probably keep to invest enough money in interbank market. Thus, from a short-term view, China's bonds market behaves friendly to those who hold long-side positions in recent. So what should we pay our attention next? First, economic data, which indicates signs of economic recovery, and the PBOC takes decisions about monetary policies based on the data. Second, Trump administration's move about the tariff things, which is full of ups and downs and unpredictable. It's hard to acknowledge this is an informed policy coming from a mature politician. Third, the funding condition, which holds the fate of the bonds market, especially the short and middle term side. About bond investment strategies, now China's bonds market is unstable and unpredictable, which is a consequence of a lot of things I said before. So the best strategy is handling uncertainties with certainties. We just hold our positions and wait, and focus on short and middle term bonds to avoid impacts from outside. After all, the PBOC has behaved well in recent weeks. So, as always, if you want to know more useful financing information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding, experience, and bond market investment strategies, and waiting for you. So, bye guys, until next time.